Tonight we are live from The Hague, London, Nairobi and southern Chile. Welcome to StockBox Premiere. Well, joining us on the panel tonight, our guests are Sean Wade, Jack Dan from Power Metal Resources, that's the ticker POW, where we're talking about their uranium project in northern Saskatchewan, Canada. Aldo Boitano, the CEO of CleanTech Lithium, that's the ticker CTL, where we're talking about their Laguna Verde lithium project. And finally, Jason Brewer, the CEO of Marula Mining, talking about Blesberg Lithium. Well, the format is to begin with a 10 to 15 minute interview, followed by the open Q&A session for 15 minutes. And this is your chance to put your questions to the directors speaking using the live chat. Please do join in the conversation using the YouTube live chat or indeed hashtag StockBoxPremiere over on Twitter. And do hit that like or subscribe button if you are enjoying the show this evening. As always, the directors and people appearing on tonight's show are bound by the market rules, but they will do their very best to answer your questions as they can. Well, to kick us off tonight, let's welcome our first guest. That is, of course, Sean Wade and Jack Dan from Power Metal Resources. Good evening to you both. Sean, first of all, how are you doing? It's your first time on StockBox Premiere.
Hi, Mark. Yes, thanks very much for having me. It's very nice to be speaking to you live.
Indeed. And Jack, it's also your first time on StockBox Premiere Live. Welcome. How are you doing?
I'm fine, thank you.
Well, it's good to be speaking to both of you. We're going to be talking about your uranium project. You've got 100,000 hectares within the Athabasca Basin. The portfolio was indeed assembled through staking, and as a result, all of these properties are 100% owned by Power Metal with no underlying royalties. The portfolio includes 17 properties, all of which are highly prospective for uranium mineralization, and some recent news as well from these projects. Well, Sean, first of all, perhaps just for new and existing investors, maybe you can give a high-level overview of what you've got in terms of the uranium portfolio, the opportunity that you see, and what you've assembled over there in Athabasca.
Thanks, Mark. Yes, and I think you've summarised it extremely well there. Actually, it is 1,000 square kilometres or 100,000 hectares, as you put it, and that's a very large footprint. I mean, it's a very, very exciting opportunity for us, and we're very grateful to be speaking to you and to the investors this evening, because this is a really, really exciting part of our portfolio, and I think something that investors generally are really going to want to hear about. So, yep, 1,000 square kilometres. Of that's 17 properties. 6 of those sit within the Athabasca Basin itself, and people will know that as probably the world's #1 address for uranium exploration. I mean, it's home to the MacArthur River and Cigar Lake deposits, 2 of the world's leading uranium deposits, and it's an area of enormous activity currently in terms of early stage exploration, which we're doing and which we'll come to talk a little bit more about, but all stages of the mining cycle, all the way up obviously to production in those 2 cases I mentioned. So it's great for us to be there. It's at a time when the uranium market really is starting to take off. I mean, I'm sure we're going to talk a lot later on in the program about the price dynamics in uranium, and I know there's some questions on that, so I'll leave those comments to a little bit later. But I think it's safe to say at this stage that uranium is one of the most exciting commodities to be invested in at the moment, and we're giving investors an opportunity to have access to the world's premier address for uranium exploration with a very, very large footprint. So six license areas in the basin itself, 11 outside the basin. More and more of the exploration now is obviously moving outside the basin. It's a pretty well established jurisdiction. Jack will give us a little bit of a rundown later on what we're talking about exactly in sort of geological terms. But look, the opportunity here for us is to find high quality drill targets to take those assets then to the next stage in their development. As people will know about Power Metal, we are an explorer fundamentally, but we are also as we've been described, a kind of junior merchant bank, if you like, a prospect generator. So our job is to undertake methodical and cost-effective exploration to take early stage assets, add value to those assets, and then seek to monetize that over time. We'll talk a bit more about how we're going to do that. But the opportunity for our investors is to be in a very early stage in some very, very exciting project areas.
Well, you are right. Certainly, it's the place to be exploring for uranium up in Athabasca. Am I right in understanding that Power Metals perhaps has the largest exposure to uranium projects on the London market?
Oh, that's absolutely true. Yes, I mean, but by a very long way. I mean, London is, there are obviously some extremely good uranium companies listed in London, but they're relatively few in number. And so shareholders in Power Metal are, really have something that's more or less unique, which is this early stage exposure to this premium address. So yeah, it's we're not a very developed stock market from a uranium point of view. That's fair to say.
Okay. Well, you mentioned there about finding high quality drill targets there, and of course you've got a very large number of uranium properties within the portfolio there. What is the strategy to advance these projects, all of them really, and ultimately deliver value for shareholders? Where do you set your priorities?
Yes, well, I mean, I'm going to bring Jack in on that in a second to talk about the field program we've done this year and how that's developing and is going to continue over the balance of the year. But what I would say at this point is, the field program is extremely important because that establishes the targets, and then the ongoing point from there is to monetize those and crystallize that value for shareholders and look for the financing solutions to undertake the exploration. So that's the second iteration of this. But what's actually going on the ground at the moment, and how we're doing that early stage work is very important. And Jack's just come back from the area and has been overseeing some of the work there. So Jack, perhaps you can offer something there on what we've actually been doing.
Yeah, certainly. So we have got 3 field campaigns running on our Tate Hill, our Soaring Bay, and our Perch River projects. The principal aim of those is soil sampling and radon sampling to get an idea of where we can then hone in with future targets and build the portfolio forward. Alongside that, we also have airborne geophysics that's on the Reitenbach property, which is just outside the basin and part of UEE. We also have EM, which is there to identify these conductors that are very important for uranium mineralization in the area, on the Kernaghan and the Durrant Lake and the Badger Lake properties. These are all, the Kernaghan and the Durrant Lake are in the east of the basin. They're quite close to the traditional area, and Badger Lake is quite far in the south. It's quite shallow with an attractive target on it. Alongside that, we're going to undertake magnetic drone surveys, which is where we're using quite close line spacing to get high quality, high precision data over the Clearwater project. And there we're looking for faults that may host what's called a beaver lodge type of mineralization. Alongside that, on our E12, again part of UEE, and the Cook Lake project, we're conducting a magnetic drone survey in those areas too to identify these faults that may also be important for mineralization. It's all to hone in on drill targets within the next few seasons and progress the projects forward.
Okay, well, you do have a lot there. You said 17. I would guess it's impossible to explore all 17 at the same time. And from what you've told me just there, it sounds like this is all very early stage exploration, the kind of surveys that you're doing. What are the key exploration projects, let's say, for the remainder of 2023?
So the field season in Canada wraps up fairly soon. It just gets too cold to work. But we're hoping to complete as I mentioned, the field work I just discussed is ongoing and under completion. So that should be wrapped up in the next couple of weeks and months. And then we will, await the analysis from the laboratories and report back.
Okay, so you wait for those laboratory reports to come back, and that will help you then determine the next stage, which would probably come in next year's field season. Is that right?
Yeah, indeed. We can do some geophysical work a little bit earlier than we can do field work, but the principal aim would be to get back out there again with some field teams, hone in on these targets, and just build up our understanding of these deposits of these properties. As you mentioned, a lot of these properties are quite unloved. They haven't been worked on since the last cycle, or maybe even back down to the 70s. So we're working to bring these projects back up to date, hone in on these historical targets that got geologists excited 50 years ago and are continuing to get my colleagues and myself excited again and deliver for shareholders.
Okay. And I know that this is a question I'm kind of throwing in now. You don't have to answer it. It's probably too early to be talking about this, but do you have any understanding of the geology or the types of deposit that it might be? I was talking to a company just before we came on here who were talking about unconformity uranium deposits as being the real big ones that you want. I mean, is it too early to be discussing these kind of things now?
Not at all. So our properties within the Athabasca Basin, that is the area for unconformity related deposits. You've got MacArthur River, which grades up to 20%, Cigar Lake with 15 or so. It's the home of these things. And as Sean alluded to, we have 5 projects in the area, and we are exploring them now. So we will be looking for unconformity related deposits and on these ones inside the basin. Outside the basin, it's a bit more flexible. So we have some properties that are more clear, are going to be Beaver Lodge, which are these very thin but high grade veins. And we've got a Rossling analogy, an intrusive related ore deposit, which are massive tonnage, but fairly low grade on Tate Hill. So there's plenty to explore for, and it's all out there.
Good. Well, that's good to hear. Well, I hope we can follow that story as the exploration develops. But let's just talk for a moment here, if we can, about the demand for uranium. Of course, the demand for uranium has been changing quite a lot in recent years, and what this perhaps means for the Athabasca region from an investment and exploration perspective. I mean, you were able to stake those claims. Was there much competition? How are you feeling about that area specifically, given the uranium climate and demand looking forward?
Well, shall I just start on that? I mean, we have. I mean, look, I think the straight answer on that is if you look forward, it's going to be very, very busy. I mean, that's very, very clear. And Jack's going to give us some interesting sort of anecdotes, I think, on what he's seen, on the ground and how life has changed. I mean, not easy to get a helicopter, for example. Not easy to get a hotel room, even, I think, by the sound of things. But look, I think there was a couple of, what I would say from a higher level is there were a couple of other dynamics here, and I think, and I'm sure we're going to get on to talk about the sort of geopolitics of uranium a little bit later on. But in uranium, as it is with critical minerals everywhere, the security of supply is important, and which countries you're buying it from is important. The end users care very much about the sort of provenance, if you like, of the substances they're buying. So uranium is no exception. So in Athabasca, obviously you've got a safe G7 country economy. You've got very highly ranked by the Fraser Institute for mining friendly jurisdiction. It's a great place to operate. So what we know is that demand for uranium is going up, and demand from uranium from OECD sources is also is going up by a greater degree. So we're very pleased we're there. It's a safe place to be. It's a place we can operate. It's a place where we can get logistics, and it's a place where security of contract and the political environment and so on gives us confidence that we can deliver on what we're good at, which is the understanding the geology and delivering value to shareholders. But in terms of what we're seeing on the ground and how it is changing and has changed. I mean, Jack, you can probably tell us a bit about that.
Yeah, certainly. I mean, the hotel we were in Stony Rapids had recorded very few bookings for the last 3 or 4 years. And this year, fully booked. While we were taking off to do the field work each day, there was a helicopter nearby that was being used for geophysical survey. The field teams we had coming on board for this program had just been released from another uranium program, and there were other field teams nearby working on similar things. It's getting busy now, and this is at what, $60 a pound? It's just going to be crazy. So
it's going to be crazy. Okay, well that's good. Well, just on that note, perhaps of course you have a huge footprint over there. Would you perhaps consider a North American listing? I know you're very keen, Sean, on attracting the North American investors with your recent trip out to the Rules Symposium. So is a North American listing something that might be considered? Power's very well known for its spin-offs and dual listings.
Yes, no, absolutely. Well, look, I mean, we're exploring options across the portfolio, not just in uranium, but in the business in general, to give investors in all geographies access to the story, whether that's through OTC listing at the power metal level or local listings or dual listings or whatever of the spin-out vehicles. So yeah, look, I mean, we don't rule anything out in terms of the vehicle. I mean, as people know, and Jack mentioned it in his comments, we have got a current plan for a small listed vehicle to be listed on the London markets. I know that shareholders want an update on how that's going. What I can say on that is that, as with all IPOs, there's a lot of work going on. A lot of work has to go on in the background, a lot of sort of corporate finance work and preparation. But we will be in a position to update shareholders on our listing plans in due course, and we're very excited about doing that because, as Jack said, $60 a pound. I mean, 62, I think, is today's price. That chart is just going bottom left, top right at the moment, and we want to make sure that people our shareholders get the opportunity to get maximum exposure to that.
Indeed, and as Jack said, it's going to get exciting. You want to jump on that excitement as well with as many people as possible. Well, that concludes the sort of the starting of questions now. So we can now go to questions from investors. We've got about 15 minutes to take some of those questions. So I see that some questions have indeed come in. Well, there we go. Do you think we will see $100 per pound of uranium in the next 12 months? There we go. Prediction time.
Well, it's a fantastic question, and I'm sure that everybody wants a very loud, top of the voice yes. I think it's important to look at the fundamentals, though. I mean, it's not my job to call commodity prices any more than it is to call the share price, I have to say. But what I focus on, both in terms of the share price, i.e., focusing on the company fundamentals, and the commodity price, I'm looking at the fundamentals here, and that does point to a very, very optimistic scenario. And I'll just give a few points on that. I mean, if you look historically or recently historically, the uranium price and the uranium market has to be seen in the context of Fukushima, okay, and what that did for global demand for uranium, and as a consequence of Fukushima, reactor demand bottomed. I think it's more or less in 2020. So and of course the consequence of that is a sharp decline in primary production, and I think we're now, or at least we were last year, at a multi-decade low in primary production. So that's factor number one. Factor number two is, I mean, you had the Russia-Ukraine situation, which started in 2022, and the consequences of that on, in particular, the European energy market and the sudden focus on domestic supply and security of supply, which has been obviously a big demand driver for nuclear and obviously by consequence uranium, and that's we can talk about the politics, I suppose, later, but across Europe, a lot of opinions have changed in respect to the place of nuclear within the energy mix. But the third factor, and I think one that we haven't seen in previous cycles, is financial buyers. So you think of the Sprott ETS, for example. You think of Yellowcake, a highly successful model, and it's been a fantastic share. These financial buyers of uranium have not existed in previous cycles, or at least not to anything like the extent that they do now. So it's a much bigger demand driver, and you couple that with the multi-decade lack of supply, which I mentioned, and the conditions you're seeing at the moment is that the supply deficit has been largely met by running down commercial inventories, which were built up post Fukushima. But by the end of this year, it's looking as if you're going to get about, I mean, the inventory will be about 18 months worth of reactor demand, which is a level which we haven't seen since the mid-2000s. Now, why is that relevant? Well, that's when the uranium price spiked to $145 per pound. So if you want to think, well, are we going to see $100 per pound uranium over the next 12 months? I would simply point to those factors and say that they are, if anything, enhanced from what they were in the mid-2000s, and therefore I think there are very good reasons to be very bullish on the uranium price.
Okay, excellent. Thank you for that. So another question that has come in here: have Power been approached by any companies looking to joint venture, earning, or indeed invest in any of the uranium projects?
I think that's a tricky one to give a direct answer on. I mean, as people will understand, what I can say is that I think we've done a reasonable job, I think, by getting our story across, that we've got a big uranium footprint, that we've got a very exciting project. We put an announcement out on Friday, which talked about what we've found so far at the Perch River property, which we haven't discussed, but that's very exciting. A big helium anomaly there, and lots of evidence of mineralization. So that that's gone out, and the market has seen that, and we had a very good response, a lot of volume in the shares, and a lot of commentary and so on. So I think inevitably you do get inquiries, and whether they're from introducers, market participants, or whatever else. It's nice to have a little bit of attention, and certainly I think our story is getting across. So I think that's really as much as I can say on that. But certainly, if there are any opportunities for us to monetize the portfolio, and those turn into meaningful discussions, then naturally, obviously, we'll inform shareholders in due course.
Okay, thank you, Sean. So another question I have that came in here is on you, actually. Have you had any previous experience in managing a large uranium portfolio?
Well, the straight answer to that is no. In actual fact, no, I haven't. And I'm not sure very many people have, quite frankly, given the size of this particular portfolio. I mean, I do have some experience in uranium, which was I spent a very happy time as the Chief Commercial Officer at Barclay Energia, which is still potentially a fantastic asset in Spain, and apart from the sort of investor relations piece and marketing the story and explaining to our investors what was going on with the company, we had a lot of contact with offtake partners and sort of particularly US reactor buyers, and so with the sort of the full kind of scale of the uranium cycle, if you like. And so I think what that gave me, I hope, is a reasonable understanding of the dynamics of the uranium market. And certainly, that was, I want to say 2018, 19, thereabouts, just sort of prior to COVID. And this was sort of obviously much closer to Fukushima. And we were very, very bullish on uranium then. And those conditions, the ones I talked about just a moment ago, have got even more acute. So, where we were bullish, 5 years ago, I mean, that's only just got, as I say, just got more acute. So I've not managed a large uranium portfolio. I mean, I'm a finance guy. I think most people know that. But I've spent the last 10 years in the mining sector, helping companies to raise money and build their profiles. And so hopefully, we'll have a bit of success doing that here.
Okay, thank you very much. Well, another question that came in just before was in terms of the other projects within the portfolio here, do you plan on exploring any plans to explore across the rest of the portfolio effectively? And there's anything that you can say with regards to Tati Malopo and the Saudi ventures? And this person does say they appreciate you might not be able to give a lot of detail, but just anything you can give on that, on the wider side of the portfolio.
Absolutely. Well, look, I mean, the work continues across the portfolio as ever. And as I said, fundamentally, that's our business. We are an explorer. We're not a passive investor waiting for commodity prices to go up. So, we are active at Tati in particular. We updated the market on the 31st of August about what we'd found and how we had advanced the project up to that point. And I think, and that was what we said on the 31st, was that we had some soil sampling was complete and was being sent off for assay, and we're expecting those results soon, and those results are imminent. So the next thing you'll hear from us with regard to Tati will be those soil sampling results and how that's helped us to hopefully progress that project. So watch this space. We'll be talking about Tati very soon. On Malopo, I think as we said, the goal at the moment is to work with third parties to look for a strategic joint venture partner. I'm not going to pretend that's easy. There are live conversations, but it's as everybody knows, it's a world-class project. I mean, we're absolutely convinced of that. We've done a lot of work on it, and we're certain that we can add value and we can realize that value for shareholders. There is a lot of going on behind the scenes, and talking to potential partners and to our own people and geophysicists and so forth. And I know that shareholders are very, very keen for an update, and we will be able to do so in the not too distant future. And by which I mean, a matter of sort of weeks as opposed to months. When I say in due course, that's reasonably imminent. So it's very high up the priority. I mean, it's an extremely important project for us. It's in many ways it's a flagship, and I know it's a reason why a lot of our shareholders are in the shares in the first place. So we're very conscious that people need to be kept informed, and we're going to be able to do that very soon.
Okay, thank you.
And Saudi Arabia you mentioned. So yeah, so look, there's a lot going on there. We've been in touch with a fantastic group of consultants who have made a huge number of introductions to us, both in Saudi Arabia and in Oman, and those conversations are progressing very quickly and look to be extremely productive. I mean, there is a very open-minded attitude both in Saudi Arabia and in Oman towards bringing in overseas companies to help with exploration projects, and obviously there's evidence that on some of the bigger scale projects, if you look at Moshiko, for example, and on what they're achieving there, and that's the space we want to be in, and we're very confident that we're going to be able to get some great opportunities. And we're going over towards the end of the month to meet some of our new partners and hopefully some of our potential new exploration partners.
Okay, good. Well, lots to come, it sounds like, Sean. A couple of questions left, I think, at the moment, but if anyone has any other ones, please do submit them there on the YouTube. So this question, is the company likely to be drilling any of the uranium projects within the next 6 to 12 months? If yes, which projects? I guess the answer is yes, but I don't know.
It's sort of, I think, is the answer. I mean, look, the purpose of the exercise that we're doing at the moment, and this is, as I said, 10 of the 17 properties, and Jack's given us the details on which projects we're talking about. The idea of this is to establish high quality drill targets, and essentially set the scene for a drill program which would probably go into next season. Now, look, drill programs are expensive and they're time consuming, and but essentially they're very, very capital intensive. And as I think our shareholders know, the model here is that we like to incubate the project, and we like to seek to add value through that early stage, methodical and cost-effective exploration to get the assets to a point where we can bring in a partner, or we can do a spin-out IPO or whatever financing solution there might be to finance those exploration programs. So I think I don't really want to be too specific, therefore, about where can we drill, when, which project, how much is it going to cost, and so on, because we're going to be looking for financing solutions in order to do that, and I think that's the next piece to put in place. So when we are able to talk more about that, then obviously we will. But the game at the moment is to work out what we've got, because a lot of, as Jack said, a lot of this data hasn't been updated for very many years, and then to establish the drill targets from there.
Okay, excellent. So a question here that's just come in: is FDR still the next IPO to go live from Power's IPO pipeline, or could we see the uranium energy exploration go live first due to the increased global focus on the uranium markets?
Well, I mean, that's from Tom, and we know Tom, and we're very grateful for all the support he gives us on the various channels. And actually, I'm sure he's asked that slightly tongue in cheek, because it's almost a bit like there's a bit of internal competition at Power. I'm happy to say, everyone wants to be the first to market. If you remember, I think you covered it, when we had our nice day out at the London Stock Exchange, where Oliver was able to start the day's trading, and it's a great event for all the team to do that and to see the companies go live. So there's a very healthy and energetic competition internally to see who's going to get across the line. But look, in all seriousness, I know that FDR has been on the pipeline for a little while. It's been difficult, frankly. Markets have been terrible, despite the fact this is an extremely high quality set of assets with a really first class CEO, with a tremendous amount of energy and experience in the area. So it's look, we've got advanced plans for that listing, and people will hear from us soon. But I don't want to preempt Tristan and I certainly don't want to lose any wages or anything like that. So I think we'll just leave it there for a moment. But both projects are have a great sort of deal of energy and application going into them, and we're really excited about being able to announce either of those getting to the market.
Okay. Well, thank you. We are up on time, but there is just one last question here, if you can address it, Sean. Any news concerning New Ballarat Gold? The IPO was planned, but nothing has been forthcoming. Can you update?
Yeah, I mean, there's not a lot to be able we can say just on that at the moment. I mean, again, it's a great collection of assets. It will be has the potential to be a great IPO because I think people understand the Victoria Gold story. It's a very historic story. There are we have to look at the right structure there. We have to get the right market conditions. It's a pretty big set of projects. We need to get to a stage where we've done the optimum amount of work to be able to present it in the best possible way for an IPO. We have to make sure that the structure of the company is absolutely optimal, that we've got the right personnel, that we have all the data and everything that we need. Permitting obviously as well. It's an area where there are inevitably some sensitivities, whether those are cultural or perhaps maybe more sort of economic, and all those things need to be put in place. I'm conscious that we haven't said much on it, but it remains a high priority asset for us, and we are committed to updating people on that as soon as we can.
Okay. Well, for now, thank you very much for your time, Sean Wade and Jack Dan. I hope you can stick around for an hour or so, come back for the roundtable discussion at the end. But for now, thank you very much for your time. And I would like to go straight to our next guest, who is Aldo Boitano, the CEO of CleanTech Lithium. And Aldo, this is actually your third time on StockBox, and it's every time.
Yes.
I think you are our live star. So welcome back on. How are you doing? You look a little bit chilly.
Good, thank you. Yes, it is chilly here in southern Chile. It's winter.
Yes, I saw the snow earlier today. Well, CleanTech Lithium, as I understand, they're on a mission to be the leading supplier of clean battery-grade lithium for the global energy transition. And the company owns 3 prospective lithium projects spanning over 500 square kilometers in the Lithium Triangle in Chile, the world's center for battery-grade lithium production. So we're going to focus mostly on your flagship asset, that is the Laguna Verde lithium project. But could you perhaps just introduce the company here briefly, the 3 projects, and why you're going for the cleanest supplier of lithium?
Okay. Well, the background is these projects are in pristine areas, the high altitude, 2 of them, 4,400 meters. There's plenty of infrastructure in place, including access to substations. In my background, I developed 3 large solar clean solar energy projects, and also background on mountaineering. So from day one, as I'm the co-founder and CEO, I saw no conflict on having a green solution to the world's decarbonization and electromobility and these projects. And at the same time, it suited other people, and we got an excellent board and got listed. They were off the radar, these areas, because of the elevation and because they're really not salars, mature salars. They're salty basins, and then we did the exploration and we had the resource up and everything. But we covered the whole area, the whole basins, and that's also important for a big statement on direct lithium extraction, that is re-injection, and you have to control the hydrogeology variables. So that's in a nutshell what we have and what we did.
Okay. Well, Laguna Verde already has a JORC compliant resource, doesn't it? Or an estimate, I should say, of 1.5 million tons LCE at 205 mg. So, I mean, can I ask you, first of all, what that actually means? I mean, what sort of grades are we talking here? What does it mean in layman's terms?
That means we can produce 20,000 tons per year, at least for 30 or more years. You have different categories on the resource. The lowest is inferred and the higher is indicated and measured. And we have 800,000 of those 1.5 into indicated and measured category. And that goes into reserves. We have a scoping study that says that 20,000 tons per year over 30 years with $1.83 billion project at the net present value. And we have already going into a PFS. We're de-risking the project. We're doing environmental work, work with the communities, metallurgical work with the direct lithium extraction pilot plan, and now going forward with a PFS done by a world-class engineering firm, Worley, and we'll be aiming to have that in the end of February, the first quarter of next year. And at that time, we'll engage into a strategic. In the previous panel, the previous presenters will engage into strategic partners. We've had a lot of them under NDA, car manufacturers, battery producers, and we'll engage with them.
Okay, so you're looking to get the PFS done by the end of February, which is of course a big study to get done, isn't it? Are you looking at the same time to increase the resource? Because I believe this resource has only been established by limited, but of course very successful drilling. Is there scope here to increase the resources alongside doing the studies?
Yes, that's the idea. To increase the resource, we're going to go in the third drilling season, combination of drilling for resource and drilling for hydrogeological work. We're the only ones doing that hydrogeological work and modeling with reinjection, with pump test, and so on. So, but we aim to be in production in 2026. So we're changing. What are we looking for?
In production in 2026. Okay, so that's not too far away. And as you go down the development path, then I guess the market and yourselves are going to see how this could come together in terms of how you would actually get it extracted. You know, what it might look like in terms of a mine, a working operation. You said there about strategic partners, and you mentioned car manufacturers. I mean, we've heard of this before.
Yeah.
Do you want to actually partner directly with?
Well, it's rare. Lithium, lithium is so scarce. There's not much lithium, and there's a lot of giga battery factories being built. That is very rare in the mining space. That the end user, the battery producer, the car, are big Asian trade houses are engaging with producers, and it's been happening. The likes of Rio Tinto, of Glencore, Ganfeng, and BMW and Tesla and so on have signed MOUs, have partnered, or have even bought projects. So we're in the same space. We're just not engaged. We're the only one listed who's not at this stage doing that. We want to have more certainty of the project, a higher valuation. We're actually going to do a listing in Australia as we speak. We'll start 2 weeks from now. We'll start a roadshow. I'm aiming to do that the first week of October. So we're financing the project ourselves, and I'm going to take a combination of debt and offtake agreements to finance the 400 million capital, the capex that we need to finance the 20,000 ton per year production in Laguna Verde. That's the numbers. All these things that I'm saying are part of RNSs or are in our website with presentations. So it's exciting. It's exciting times to. When we started in 2017, we were completely off the radar. People were looking for higher grades, maybe more small tenements on high-profile salars, and things have turned around completely.
I mean, just give me an idea of what the ore body is like. What are we talking here? Is it hard rock? Is it spodumene?
No, it's brine. It's brine. 100 meters below, 30 square kilometers, 400 meters depth, and that has that concentration that you spoke, 200 milligrams per liter or 200 parts per million. And with that, you pump it up with direct lithium extraction with a resin. You extract the lithium, you re-inject in another portion of that subsurface aquifer, the 100% of the brine without the lithium, and then you process the lithium all the way into lithium carbonate. So that's what it is. It's out of brine, but it's a different way of doing it. It's been around for 20 years in a salar in Argentina, Hombre Muerto, owned by Livent, but it's coming more mainstream as the grades of the lithium are lower than what it used to be, and at the same time the push for environmental greener credentials. That's what has been happening.
It's definitely perhaps a newer method from what maybe investors are used to when you see the hard rock, the pegmatites and crushing and going through a plant, that kind of thing, and ore sorting. But we can talk about the process perhaps and
Yes.
the solar idea a bit later on. When would you look to engage with partners then? Would that be, when would you look to start?
Right after the PFS, right after the PFS. We have various NDAs in place, a lot of site visits. We have a data room for this high profile strategic investors. But we have kept further more serious conversations until March, whenever we finish the PFS. Our executive chairman, Steve Kessler, that's the way he financed the two largest copper mines of the world when he was here in Chile. He's an Englishman. He developed Escondida and then Collahuasi, and often a combination 5, 10, all the way to 20 to Japanese trade houses, Sumitomo, Mitsubishi, and what's the third one? Mitsui. So that way you finance all the investment, the capital investment, along with they come with offtake. So we don't want to dilute the shareholders farther away. And that project, Laguna Verde, pays itself less than 2 years, and that money comes in to finance the next project, Francisco Basin, who's next to it, 6 months behind, also with a scoping study. We're going out next week with that public, and then we want to start the PFS right after that. It will be finished some 3 to 6 months right after Laguna Verde. Also 20,000 tons per year.
Okay. And are you building a pilot plant to test your direct lithium extraction process?
Yeah, we have a small scale lab test. We've been doing it for some 6 months, and we're commissioning. We already have lots of the parts in our warehouse and final plant in Copiapó, where we bring the brine for 1 ton per month. We've made a public announcement of that. It came out of Belgium. It's a multi-valve system out of a Chinese company called Sunresin, who has several plants producing lithium with direct lithium extraction in the world, and also partnered with American and Argentinian companies.
Okay, so that
the idea is to send to the future off-takers, vendors, producers, send lithium, certified lithium, so by the time we come into production, our lithium is bought. And because it's, even though we certified 1 kilo of battery grade lithium at 99.9 when the requirement is 99.5, that little 0.05 or 0.001, it's important for the production. So we have to send them samples, big samples.
Yes, indeed. But that pilot plant process is on track. It's going well. You're happy with
Yes.
This progress? Okay.
Yeah. Everything has difficulties because of the elevation where we are and everything. But we have a very dedicated team with a combination of top people in the industry and people abroad who are consultants and companies who are certifying our work in the various fields. So yeah, very, very pleased. One thing important, we have more than around 50% of the people in the company are women, just by merit, the way it happened. And I'm talking of operations and hydrogeology and community relations. So when I say skilled, it's a combination of people from various countries to nine nationalities we have already.
Well, what's it like to operate in Chile? You mentioned that you have some problems perhaps with the altitude. What's Chile like to operate in compared to perhaps more familiar jurisdictions for investors?
Well, Chile is a prime jurisdiction along with Canada and Australia, a mining jurisdiction, always been, and I think will keep on being. We're a mining country. The workforce is not as big, but on mining, but the aggregate taxes and indirect wealth that mine creates is very important. It's always been. We've applied last week. We're the first private company who applied for an exploitation permit called SEOL, Contract of Special Lithium Operation, and we've received very well received by authorities in line with the announced national lithium strategy that was announced back in May by the government. So very excited about that too, because that's a final permit that we need to go into production. We're doing everything else, of course, environmental impact assessments and everything else.
Okay, well that's good to hear. In terms of the cash position, Aldo, what's the current cash runway for the business? Are you funded through to, well, how long are you funded through to? Through PFS?
We're funded until the PFS, but we're also looking for funding everything else. We need to fund more drilling programs, larger hydrological work, and the Greenfield project, we're just starting to drill the Yamará project, and we're going towards Australia to do that.
Okay.
We already announced that in an RNS a couple of months ago, but we're in the final stretch to go there, actually.
Good. Excellent. Well, we're just now on time for our Q&A
Questions.
with shareholders or investors, the audience. So let's start with some we've got coming in here. On the website, it states that Laguna Verde aims to be commercially producing by 2026, and you've confirmed that earlier in the show today. What are the key steps to make this happen? Key milestones?
Yeah, to have the EIA approved, environmental impact assessment approved, the PFS finished, and then where the FS, the final feasibility study finished, the metallurgical process on track, producing 1 ton per month, and all the permitting, the construction permitting and everything. Direct lithium extraction plant takes around 9 months to construct, and it takes only hours to produce lithium compared to evaporation ponds, the whole process takes 2 to 3 years to build evaporation ponds and then to start producing, harvesting the lithium itself out of the evaporation ponds takes like a year. So those are the key steps, yeah, engineering, permitting, further exploration, and all of that brings uncertainty down.
Excellent. Thank you for that, Aldo. So let's have a look at some other questions that come in here. Is the company totally focused on Chile only as a jurisdiction? Of course, you are there exclusively.
Yes.
Okay.
Yeah, I received from around the world and also out of Argentina offers of lands and projects. But running 3 projects already, it's a lot. We aim to add more land in Chile. We're always looking for that, but yeah, we really don't want to spread too thin.
Yes, important not to spread too thin. Well, I can see some more questions here. Do we have a further update on Llama? Am I saying that correctly?
Yamará. Yeah,
Yamará.
We'll have one soon. On that. We did some drilling and found some brine, but we're announced to the market that we'll announce that in the market fairly soon, I hope.
So that's a very soon update to come. Okay, thank you. Does the company take advantage of the blossoming renewable energy grid in Chile?
100%, yes. And I'm actually part of that. I developed 3 projects in the engineering and then sold them to be built, accounting for 800 megawatts. We're in the best radiation of the world. And then we have the southern Chile with eolic energy and hydroelectric. And that way you can sustain a 24/7 production on renewable energy. Al Gore, when he updated his documentary, he talked about Chile being from, I don't know, between 10 and 20% of renewable, over 50 right now. So thanks for the question, whatever that person was. Yeah, we have to take, we aim to be one of the greenest lithium producers of the world, so we have to use renewable energy. Of course, at 4,400 meters, it's hard to do it ourselves. We'll do everything we can in electric vehicles and everything, but then we'll bring the energy because we have very close to substations with ample capacity to connect.
Okay, that's good to hear. So a couple more questions. If anyone does want to ask any questions to Aldo, please do type them on the YouTube there, or you can go onto the Twitter and follow StockBox and ask the question there if you'd rather. But we have Aldo for a few more minutes yet. Now, we did talk about the altitude, Aldo, but there's a question here. I mean, how much of an issue does it cause exploring at such altitudes?
Yeah, for exploration, we have a window because it's so high. The temperatures drop very dramatically when the winters start kicking in, and there's a big snowfall on winter then to cut up back. But operationally wise, we would not be even the 5th or 6th higher mine in Chile. There's mines who operate higher when they're in full swing. We have a very strict protocols for people to follow, the way we drive, the way we rest, the water. We test them. It's mandatory high altitude testing and everything. But in operations, it won. And in exploration, yes, it adds some expenditure because of the window that we can drill. and also because of the shifts and things we have to do to people to come up and down. The first couple of days, they're not very operational. But yeah, good question.
But this will be, I guess, it's just the factor of where you are. I mean, you know, we talk about the Canadian field season. It's the same idea, isn't it? You can only explore or work
Yes.
certain times
Yeah.
of the year. And you
The
can
good
finish
thing
within.
the good thing of the elevation, the indigenous people don't live outside. There's very limited flora and fauna. There is, so that all it's very important for the sustainability of the project. That's the good thing of being high. And for me, I love altitude. There's the highest volcano of the world is very close to our campsite. So I hope to, on my free days, climb it again.
Climb it again. I mean, and would the altitude cause any issues when you get to extract? I mean, this will all come in through various studies.
Operational wise, no.
Okay.
People have asked us question about the brine getting frozen. It doesn't. It has so much salinity, it doesn't get frozen. But of course, the operation itself will have to do as other mines do, comply with all the safeties and medical issues, so we get everything right.
Yes, indeed, that's also important. Okay, well, there's another question I see here. Any more that I see? Actually, a couple of pulled in maybe here. Has there been any initial discussions around offtake? Is the one that I've got
Yes.
first of all. Yes.
Yes, lots of them. Like I said, lots of NDAs, data room visits to site from a various people out of companies being interested, car manufacturers, battery manufacturers, big Asian trading powerhouses, also mining companies. All of them have been approaching us. But again, we're holding those until we have the PFS of Laguna Verde finished and are in a better risk situation, less risk for whatever we bring in. And we aim to finance a big part of the capex with this offtake strategic partner.
Okay.
To bring in.
Okay, excellent. I see another question. Again, it's on La Mara. I know you mentioned before you have an update soon, but I guess people are wanting updates. Why? Is there any reason why there's been a delay?
Yeah, the first thing, we had an app, a state company, drilling for 20 some years for oil and gas. And our first hole hit gas. And that got the whole program completely delayed. We have to seal, we have to measure. Okay. They came, and so it was not a commercial viable gas, but so that delayed everything. And now we're analyzing everything there, and at the same time we're analyzing the surface lithium. We're doing geological studies on the surface. So we want to come with something more meter to the market. But yeah, it's a long delay. I agree that it's taking us long.
Okay. Yeah. Well, I mean, delays are part and parcel sometimes of the work, but yeah, if you recognise that shareholders would like to have an update, and I'm sure you will get there when you can. Does Chile have a stable political situation?
Yes, it does. We have an independent central bank, independent judiciary system, two good chamber of parliament, and then Congress. We rejected a proposed constitution, and now agreed on a different way to get a new constitution in place. 68% of them are from the center right. There's 12 rules of engagement that the Congress set up, and that's going forward. And yeah, we have everything in place. Chile's it's considered a developed country in the part of the OCDE, part of many. We have 85% of the world's economy in free trade agreements, and we're obliged by many things with those free trade agreements on various things. Yeah, okay. It's more stable than in 2019 when we had an unrest, and then the way to deal with that was to the reform of the constitution. And again, the first time it was rejected, it was more towards one side of the country, and now we're working towards more by bipartisan approach to the constitution, and yeah, that's been created stability.
Okay, so I think there's one last question, unless any more do pop in here. But this one, any news after the CEOL application back from Codelco I hope you know what that
Not-
means, because I don't.
Yeah, Codelco, it was where I was born. It's the largest copper producer of the world, is state-owned. Not from Codelco or Enami. Enami is also a smelter, state-owned companies, and both were declared as part of the national lithium strategy as vehicles for bringing the private sector in, where the state is a minority participant. No, but we've heard positive news from all other sectors of the government, from mining ministry, from Corfo, from the treasury, from economy, and that will come down to eventual. We can ask for a sale ourselves without partnering with the state, but in our application we said, even though we rightly so could get a permit 100% for us, we're looking for ways of partnering with the state in a minority stake. Enami has a 10% participation in Tech, a copper project, Quebrada Blanca Tech copper project, and then also in the past signed an MOU with Wealth Minerals on lithium, also on 10%. So that's the kind of things we're looking. But Codelco has an approach, as in particular with Enami, we've had a lot of conversation, and the government, like I said, supports our application with ongoing conversations that I can't disclose.
Sure. Okay. Well, I think there was perhaps one last question to come in here. We did touch on the financial situation, but this question is just coming. Does the company have enough money to cover operations next year?
No, we have money all the way to the PFS of Laguna Verde, and that's why we're going to Australia to the dual listing to cover that. We have no debt or anything. The last time we raised 12.7 million pounds, 47p. The stock is around 60, and that's good for us to go and raise money in Australia. It'll be very good to be in both primary mining jurisdictions. We see it as AIM in the UK and then ASX in Australia.
Okay, yes, that's good. So you expect to complete that listing roughly when, Aldo?
The first week of October, around the first 15 days of October. Yeah.
Okay, so not very long away. Not very long.
No, I'm about to catch a plane next week and start the roadshow south to southern hemisphere.
Oh,
yeah,
wow.
South to south.
You'll be busy. Maybe we can catch up halfway through and see how it's going.
Yes,
might be nice.
Of course. Thank you always.
Well, thank you very much, Aldo. I think that concludes pretty much the questions that have been coming in from investors in the audience today. I think so. So again, I hope you can stick around for half an hour for our roundtable discussion. But thank you very much for now, Aldo from CleanTech Lithium. And what we'll do is we'll go straight to our final guest, a very regular gentleman on StockBox here. That's, of course, Jason Brewer from Marula Mining. Good to be talking to you again, Jason. How are you?
I'm good, Mark. Always good here.
Always good. Okay, well, it's good to have you back on the program. Of course, we're going to be focusing on your 100% owned Blesberg lithium project located in the Northern Cape province of South Africa. And reading from the website, Blesberg is one of the largest known economically mineralized pegmatites deposits in the area and has historically been the largest single source of tantalum in South Africa. And of course, lots of stuff is going on at the moment at Blesberg. We see a lot of pictures, of videos coming in on Twitter there of the activities. But before we get an update on what's going on, I wonder if you can perhaps just give a bit of an overview of the project, the scale of opportunity, and just a little bit about what you see as the opportunity here.
Of course, Mark. As you've pointed out, it is the largest mineralized pegmatite there in South Africa. And it was actually mined intermittently for over 80 years and was the primary source of tantalum in South Africa. Whilst they were mining that, they weren't extracting any of the associated lithium, any of the spodumene. And so for 80 years of relatively small, medium-scale mining, they basically stockpiled that spodumene, the quartz, the feldspars, the mica that was also within that pegmatite. We have identified the opportunity to come in and reprocess the historic stockpiles there, which are anywhere between 250,000 tons and 400,000 tons of material, and produce a DSO, a very high-grade spodumene ore. And we've done several bulk samples, several samples of our process material, and that lithium, that spodumene mineralization is coming out at over 6% Li2O. So a very good high-grade premium product that the market is certainly looking to secure on a long-term basis. So we mobilized our team to site in November last year. So it's been close to 9-10 months there now, and we've been focusing on reprocessing those stockpiles. That's not the end game. That's not the end game. So our strategy is kind of threefold. Start processing those stockpiles, and that's a 24 month period of producing between 1,000 and 1,500 tons of a saleable spodumene ore product, grading 5.5 to 6%. Concurrent with that, complete a JORC compliant drill out of the pegmatite, which obviously extends out across the prospecting license. And I guess once that's completed, which will be completed in the next 3 to 6 months, move towards a more traditional open pit, hard rock, conventional lithium mining operation. So the opportunity as we see it is very significant. We've got an immediate cash flow generating asset just from producing the stockpiles. We've got an aggressive exploration program that's already underway, and we're drilling, and we're obviously pushing ahead very quickly on that. And we're already commencing the various mining studies to move into that hard rock mining operation. So we see this as a potential to build that 10 to 20 year mine life open pit operation that will become South Africa's largest leading lithium producer.
South Africa's largest leading lithium producer. That's a nice bold statement there, Jason.
I'm very, very good with my bold statements. We like to back the team that we've got in place. That's for sure.
Yes, I know. Yeah. Well, I mean, I want to pick up on some recent news where the company recently signed off on a trial shipment of high-grade lithium ore to a Chinese importer. But in the same news release, it was mentioned that Marula was in further off-take discussions. Can you expand at all on any of the interested parties here, even if you can just give a number of the people that are interested?
Sure. As I think Aldo was just saying there, lithium is in such demand that you're regularly approached by end users, by trading groups, by people looking to basically secure a supply of lithium. And most of the operations around the world are already locked down. Their product is, it's encumbered. It's already dedicated towards a specific company or trading group. For us, I guess we've come in very quickly, and I think that's surprised a number of those trading groups and end users. So when we initially took Blesberg on, we actually secured a $5 million prepayment, and we used half of that to basically commence operations and also buy out the minorities in this project. That was on a short-term prepayment basis based upon the first 1,000 and 2,000 tons. We're actually close to finalizing the kind of the termination of that and replacing that with a long-term arrangement over the stockpiles and over the hard rock operation. So that initial shipment, which we announced just the other week, was basically a small shipment going into China, basically to get our product into that Chinese market, whet their appetite, so to speak. It's a plus 6% product, and one which I think is going to create a bit of a little bit more interest. But in the meantime, we've been negotiating here primarily with one leading party, a European-based trading group, global-based trading group, very significant, that's got a lot of exposure in the lithium sector. But in parallel with that, clearly we don't want all our eggs in one basket. We've had another 4 groups that we've been working with, again, negotiating a long-term arrangement which secures the product stream out of the stockpiles, which, like I say, is a 20 to 24 month period of 1,000, 1,500 tons per month of this product before leading into the hard rock operation, which is going to be a much more significant production profile from there. I should say. So look, it's European predominantly based groups. We've shied away from that Chinese market because I think strategically it's important for us to deliver product into the European market. The importance of critical metals in that market is coming stronger and stronger by the day. And you see it in the UK there, Mark, with a tremendous amount of discussions on how companies, how end users can actually secure that long-term sustainable production profile. So we've been buoyed by the interest, and we're busy pushing away, and hopefully over the course of September we'll be able to finalize these arrangements.
Over the course of September, excellent. Well, it certainly sounds like you have plenty of irons in the fire there, away not only from China but also in the European Union. So we look forward to seeing some of those developments, Jason. Now, I want to talk about the activities that have been going on site. There's been, of course, almost a convoy of new machinery that we've talked about before arriving in recent weeks. Could you perhaps give investors an overview of what is going on to date at the site with the new machinery that's been purchased, and what's going on with the ongoing processing there from an operational standpoint?
Sure. Look, over the past 3 to 4 months, we've invested roughly about $4.5 million in brand new equipment, mobile mining equipment and processing equipment. So the mobile mining equipment has been secured through Bell Equipment out of South Africa, and we've been able to secure that equipment through the relationship we have with our major shareholder and co-development partner, which is a leading South African mining fund, mining company, which is Q Global Commodities. So through them, we have invested in brand new excavators, brand new dump trucks, brand new dozers, loaders. So there's been a flurry of machinery arrive, as you say, over the past 3 months. That's allowing us to move a minimum 1,000 tons a day of material. So it's materials rehandling from those historical stockpiles, which is basically going through to the run-of-mine stockpiles and is then being processed through what we have at the moment, which is a mobile crushing and screening unit. And then that produces 3 sized products, of which then the sorting of the high-grade spodumene is made from that material. As of, I think, today, the run-of-mine stockpiles roughly about 12,600 tons, and then you've got the 3 product sized processed materials, which collectively is about another 12,500 tons. So you've got a stockpile of about 25,000 tons of material sitting there at the moment at the plant. We've also, as you pointed out, invested on the processing side as well. So we're in the process of doing civil works, cements works now for a static crusher and screening system circuit, which is 120 ton per hour capacity. And that is going to be fed through to what we've just announced the acquisition of for about $2 million US, 2 sensor-based XRF sorters, one a TOMRA product and one a Rados product. That is going to allow us to basically produce between 40 and 50 tons a day of a saleable product, a 20 mil product, which grading 5.5, 6.5% Li2O. So some reasonable revenue streams projected on the back of that 1,000, 1,500 ton per month of product. That new processing equipment is being, the Rados plant is being constructed in South Africa now, should be up and commissioned up on site in the final quarter of this year. The TOMRA plant is actually being refurbished as we speak by TOMRA's team in South Africa, and that'll be up on site and commissioned October, November. So things moving ahead very quickly there, which will then allow us really to start producing at some reasonably strong grades, generating your revenues of between 30 and 40 million annualized US dollars. So a great earnings stream from us from what is our stage 1 product of just reprocessing those historical stockpiles.
Indeed. Well, thank you. That's a very comprehensive update, Jason. So while you're waiting, of course, the sorters there, you've already got the processing going on, haven't you? That's basically currently ongoing.
Absolutely, absolutely. And the whole point was to get going, to basically do a proof of concept, demonstrate that we can get up there, we can get a final product into the market, and in parallel with that, do the exploration to prove up a more longer term hard rock operation, but show very early on that this material, which has come from the hard rock operations from the previous historical mining, is a product that is in demand, and we're able to get it out there into the market. So So yeah, there's been a lot of work going on, and still is, obviously, but a lot of different streams in parallel: your exploration, your operations, and then you kind of call it your study work for the hard rock operation as well.
Okay. Well, talking about the hard rock operation, Jason, what's been going on with regards to the exploration here and the drilling program at Blesberg? You able to update on any of the progress here, and indeed what outcomes you hope to achieve from this campaign?
Absolutely. Look, it was, I think, literally a month ago, we appointed PDS Africa, a very experienced South African drilling company, to complete the initial exploration, well, not initial, the resource definition drilling program that we've committed to. It's a $1.35 million program, 38 holes, diamond holes, basically for 2,900 meters. They're rough. It's in two phases. The first phase of 20 holes for 1,500 meters, and that's being done on a 50 by 25 meters grid spacing to define that initial resource, which we expect to get completed over, well, it's over the next couple of months now. We said 3 months. We're 1 month into that program. So from the basis of that initial drill out of the first 20 holes, I think we certainly did 10 at the weekend, so we're probably 12, 13 by now. We'll have that initial JORC compliant resource. In parallel with that, we're doing a lot of the mining studies, the geohydrology, rock stability, and so on, such that we move very quickly into the new year with our mining studies in place. As soon as that first phase drill program is completed, we're then moving to the second phase drilling, which is on a 25 by 25 meter spacing, a further 18 holes. And that's to increase the confidence level in that resource. Obviously, on a 25 by 25 meter spacing, that's going to be quite significant. But it's also stepping out. So at the moment, the historical mining has been on the hill, on the Blesberg Hill. There's some images and some videos which we put out today, which very clearly shows from some of the drones that we've used on site how that pegmatite extends out into the flats. The existing pegmatite is about it's over 1,000 meters in strike length, and it is open. The main mineralized section of that is about a 400 meter area, which has already been identified, and from where a lot of that historical mining for the tantalum has been focused. But we're clearly stepping out into the flats and extending the definition of the defined mineralization through this drill program to give us greater confidence. That's just on the Numus 1 pegmatite, which, like I say, that's the largest mineralized pegmatite in South Africa, and historical work has defined between 8 to 10 million tons there. There's a number of other parallel pegmatites which occur. I think you refer to them, the geologists refer to them as swarms. Numus 2, which is slightly smaller but parallel to the Numus 1. Again, that's already had spodumene mineralization defined there. This drilling program will really give us that greater confidence as we move forward on the mining studies, which, like I say, we expect to have completed over the course of 2023. We already have our blasting permits, so Henk van Zyl, who's our general manager of operations there at Blesberg, he's looking to have that first blast on the hard rock taking place early in the new year in January. So a very exciting start to the new year already planned.
That's very good to hear, Jason. I'm just thinking about the rest of this year before we get into the questions from shareholders there who are watching, and I see a few have come in. What's the roadmap looking like for the rest of the year? Or maybe I can ask you, what objectives, what would you like to see? Where would you like to see the project and certain things achieved by the end of the year? If you can name a few things.
Yeah, look, there's some very key milestones here which we need to kind of deliver on from my point of view. Finalizing the new offtake arrangements is obviously quite critical for us, and making deliveries into them of significant volumes in the final quarter of this year. That's one which I think a lot of people want to see, and you're guilty by association. So having a good quality, high caliber counterparty is one which I think the market will appreciate to see there. Getting that expanded processing operation up there at Blesberg is something. So getting those 2 XRF sorters commissioned up on site, seeing the the civil works start next week on that. The new crushing and screening circuit. The guys were up on site earlier this week as part of the planning for the civil works and so on. So getting that in and seeing that, which gives a tremendous amount of increased capacity there, I think that's one of the key milestones as well. We've got the mining permit, which extends across the area that we're going to be mining and reprocessing, obviously the stockpiles. But as we move into the harder rock operation, we require the issuance of the mining right. The resource program is a key part of that. So when we finish that phase 1 drill out, which will be in the next month or so, we will then move into the geologists will have their fun coming up with that JORC compliant resource. So that's another key milestone to happen in that fourth quarter, which I think again will have a marked impact on how people view the company and the longevity of the operation that we have. So there's 3 or 4 for you, Mark.
There's 3 or 4, yeah. I guess as well, you mentioned about being guilty by association. You want to get some offtake agreements in place, I guess, as well before the end of the year, if you can.
Yeah, that'll be done. That'll be done. Like I said, I want that agreement finalized over the course of, over the course of September. Okay. The main group we've been dealing with has been doing a lot of test work, not just basically a lot of test work, metallurgical test work on that material, because they've got some big plans for that. Clearly, we want to move away from just producing a DSO spodumene, or as you know, we've been already in discussions on the production of a carbonate. So again, that test work, which they're doing effectively on our behalf with our ore, gives us a lot of confidence as we move forward. But the offtake, as you pointed out, as I've said, is a critical milestone for us to achieve over the course of the coming weeks.
Okay. Well, thank you, Jason. I do see a lot of questions coming in from shareholders, so let's get straight into them if we can. So if we can have a question come up, then there we go. The first one. Any early insights on the drilling that's been completed to date? I know we've talked about the drilling, but can you gauge anything from early signs?
Look, I'm not a geologist, I'm afraid. Jacques Perol is managing it down there in South Africa for us. Very experienced geo. Tim, who's QGC's kind of senior geologist, he was down there last week. Very impressed with the progress that's being made. The daily meters is between 25 and 30 meters that they're achieving. So we're happy with the progress they're making. So to date, everything seems to be going to plan. I don't want to prejudge things. The colors of the core look great. So that's a positive. So no, it all seems to be going quite well. We've moved ahead very quickly in the first month. We said 3 months to complete it. In a month, we've done over half of the initial drilling. So I think we'll finish the initial drill program ahead of schedule, and then it's the desktop work on the resource reports.
Okay, we do have to be careful when talking about drilling, but the colours looking good. That's very important in this exploration in lithium. So Maru, has the China first shipment left the site?
The LC has just been signed off through their agents. So with the LC in place, that is now about to commence. So we required that LC in place for the payment terms. That's been done. Tokus van Hidden, our COO, has been managing that out of South Africa and Kimberley. So that's done. So we're hoping to see some. It's only a small container load, but again, it's good to get that out.
Yes. Okay. Thank you for that, Jason. So another question that's coming in here: how soon after offtake agreement sign off can the first batch of finished spodumene product at Blesberg be shipped?
Look, we'll be doing sales in meaningful volumes because they want meaningful volumes going through, and that's going to require those XRF sorters to be in place. So you're talking in the second half of the final quarter of this year, once those XRF sorters are commissioned. So that's what we're looking at, and that's what the team on site have backed themselves to do.
Okay, fantastic. Thank you very much. So let's see some other questions here. Have CapEx and OpEx costs for Blesberg alone been disclosed to give shareholders an idea of potential net figures as opposed to revenues?
CapEx, we've always disclosed the cost of our equipment and so on.
Mm-hmm.
So there's been no real issues with that. I mean, we announced the costs of the two XRF sorters. The Tomra one was 750,000 sterling. The Rados one, which was 990 sterling, of which had already been paid the initial deposit of 691. The equipment which has been purchased has been disclosed. We haven't put out, as you would say, like a DFS study with that. But once we get those XRF sorters on site, what we'll be putting out is our own. It's not really a scoping study. It's because obviously we've gone well beyond scoping study because it's already in place and we know our cost base. So we will be putting out in a presentation, call it the budgeted numbers, both from a production rate, cost rate, and monthly, quarterly cash flows.
Okay, so people will get a very good idea of the OPEX and the CapEx and
yeah. Look, I think today we've almost kind of left it to our investors to kind of work it out. We've put enough breadcrumbs out there, I think, when we've talked about volumes, monthly volumes, where we've talked about the revenue streams. Clearly, at the moment on the stockpiles, what you've got to remember, this isn't a hard rock mining operation; it's materials rehandling. Yeah, and it's not a significant, with the equipment we've got on site now, it's 1,000 tons a day that we can move from that material. Today, most recently, some of that's been used to prepare the drill pads. We've had to actually expand the haul roads up the hill, up the Blesberg Hill. So not all of that has gone to the ROM stockpile. You've actually used some of that for haul road construction, drill pad construction, etc. But I think we've given enough breadcrumbs out there for people to get a good idea of the sort of OPEX there. It's not your drill and blast. It's not a complicated processing structure. It's materials handling or rehandling in this case. So your margins are going to be quite significant for that initial phase of the project. Obviously, as we move into the more longer term hard rock operation, then it becomes very much a conventional mining operation with your drill and blast, etc., etc.
Indeed. Okay. Do we have any indications of percentage margins yet? Well,
we have for the stockpiles.
For the stockpiles, this is yes.
Yeah, for the stockpiles, we haven't disclosed that, but for what you typically see for any materials handling, for any kind of stockpiles rehandling process, any typical operation like this, you've got margins north of 50%. Okay. So I do not believe that Blesberg is any different from any other typical materials rehandling operation.
Okay. And I think there's an addition to that question and the hard rock.
Look, it's too early for us to say, but we will be releasing when we put in the final mining right application, there will be discounted. And when we announced our exploration program a month ago, early August, we set out some of the constituent studies that were going to be part of that. One of that was a very detailed economic financial analysis. The results of all that work will be released to the market. So you'd expect to see that late in this year. So late in the fourth quarter, early in the new year. So it's either going to be a nice Christmas present or you're going to have some good news in the new year.
Okay, fantastic. Any update on the AIM transition?
Yeah, I don't want to sound like a broken record here, Mark. Literally 3 constituent reports, as I think I've mentioned before, as part of that listing: legal, technical, and financial. The financial report, Safri's, I believe is pretty much 99% completed. The technical report is completed. They are waiting to put in their technical report the summary on the titles, the licenses, and that comes from ENS, who are our South African-based legal advisors. So we've got some final discussions to have with them. So I'm expecting to have that late this week, early next week. So with that listing submission should be ready. So on the basis of a submission to the AIM committee in the second half of October. An interesting thing, just to throw something in, which came from my discussions yesterday with our advisors and with our lawyers in London. The question was thrown at me and said, Jason, why are you going to AIM? Why aren't you going to the standard list? Because by the time you get to the standard list now has a minimum market capitalization of 30 million. And they're telling me that by the time, with the next tranches of funding out of QGC, our market capitalization will be 30 million. So they're saying, well, Jason, why aren't you considering the main board, the standard list, London Stock Exchange, instead of the AIM? And it was something which I hadn't really considered. It's apparently, according to the advisors and everything, it's no different from a timing perspective. It's just, obviously, you've just got to satisfy that new criteria, which came in, I think, last year, Mark, on that minimum market cap. And I must admit, I never actually thought about it until they raised it yesterday. So it's a discussion item on the for the board to consider later this week. So I've got a call as well with Rich and Angela in London, and we'll discuss that. Whether it's a reasonable one to consider, but yeah, it's something which literally just came out of left field yesterday, and it caught my attention, put it that way. Because I believe, look, mine and also Q Global, our major shareholder to be and our partner in South Africa, we're not building this company up to be another junior exploration company listed on the AIM market and so on and so forth. We've got huge ambitions, and on the back of the balance sheet of QGC, we are that kid in the candy store that can pretty much pick and choose what it wants. So, with that sort of support, again, yes, we want to get AIM done, but if we can get a main board listing done at the same time at no additional cost, then damn, that would be good, I think. And our shareholders would be quite impressed for us to have achieved that literally within 18 months of being a sub £1 million shell.
Indeed. Well, it's definitely something that's worthy of a discussion, isn't it, then? Hopefully you'll get that sorted next week and make that decision. So I think it's a couple or three more questions left. Again, anyone who has any questions, please do submit them. We have Jason for another few minutes yet. But the question here, Jason, regarding two pieces of news are overdue: Kinusi grades and a quarterly report. When are these due?
Kinusi will go out early in the new week. So
okay,
early next week. Quarterly report, final edits being done on that. Trying to make it a little bit more detailed in terms of some of the numbers. You've heard me talking about some of those stockpiles, the material movement numbers. I think for Blesberg now, it's appropriate that we put out more definitive numbers on the sort of volumes which are being moved, processed, and stockpiled across the three sizing: the plus 140 mil, the 55 to plus 10 mil, and then the minus 10 mil. So that's in process, and that'll go out. Both will go out early in the new week.
Okay, fantastic, great. A question here that's come in again. It's the average wage of an Australian miner is $200,000 US. What's the Marula paying for miners in Africa?
Jesus, I wish I was on that. I wish I was on that. Maybe I should go back to Australia. No, we pay for our mining operations there are minimum wages, and we maintain that. We work within the well-defined regulatory environment and labor laws in South Africa. So, we're no different to any other operator there. Likewise, as we commence operations in Tanzania on the copper and on the graphite, again, we will be, we want to be that employer of choice. And you do that by ensuring that people are well paid, properly remunerated, and, come to work and go home safe. You've got to create that proper environment for people to work. And we've moved very quickly now with our employees. There's quite a few of them in South Africa, Kenya, London, Tanzania. We're going to be an employer of choice, like I say.
Okay, thank you for that. Oh yeah, I saw your comment on my tweet earlier today, Jason, about this. So you'll get a question, and here it is: the recent weakness in share price.
Damn, if I knew the recent weakness, look. What I believe I'm seeing is you've had a tremendous amount of warrants which have been exercised over the past month. As people will know, our share price has gone from 2 pence at the beginning of this year up to 16 pence. So tremendous growth there. When we did our last capital raising in October of 2022, and before that in 2021, there were warrants which were issued at 4 pence. There was a load of them which expired at the end of July, August. There's more which are expiring at the end of December. Those are priced at 4 pence. With the share price that's been up at 16 pence, we've had 5 million, 6 million of these exercised over the past month and a half. These were basically free attaching warrants on a 1-for-2 basis, I believe. So you're seeing people either selling some of their stock to pay for those exercise monies, or people have exercised them and then taken money off the table. I can't fault shareholders for making money. My job, as well as building a long-term mining business, is for shareholders to make money. And if they do that through, obviously, this way, by these warrants being exercised and then sold, guys, I can't question them doing that. That's great for them. Well done. And I'm proud that shareholders are making money out of this business. Would I prefer to see our share price still up there at 16.20p? Absolutely. Do I believe it should be up there? Of course I do. I believe it's going to and should be higher than that. But the recent weakness, I put it down to that, because you've had August, which is a terrible time in the UK market, as you know. Everybody's on holiday. So there isn't that typical liquidity in the market. That, coupled with a lot of these warrants coming on, I think that's certainly contributed to it. It's certainly not down to any material change in our risk profile. If anything, over the course of August, we have de-risked this project, this company further. With what we've invested in Blesberg, I think over August it would have been $4 or $5 million in Blesberg alone. With the progress at the copper and some of the stuff happening on the graphite, the risk profile of this company has improved dramatically. Unfortunately, the vagaries of the market, you can put out some great announcements and at times your share price goes down.
Indeed.
That's the thing. My crystal ball doesn't give me answers all the time.
No, indeed not. But I think it's fair for people to ask that question, because some people do get a bit concerned when they think something's wrong, perhaps, but when the share price pulls back. But given the rise that the share price has had, and of course the warrants you speak of there, I would say a little pullback, a modest pullback, is probably very healthy for building a foundation in the share price going forward. And it's quite evident from what you're doing that you are building value there. So thank you very much. I think that concludes all of those questions that came in from shareholders. Thank you very much for your time. What I'd like to do now is bring everyone back for our round table discussion. So I will bring back Aldo, Boyd. Oh wow, there's a very echo going on there. So it might be from Aldo. I'm not sure. Muted. Yeah, that's better. So that was a very strange echo that was going on there, but hopefully that's gone now. So Aldo Boitano is back, Jack Dan, and of course Sean Wade from Power Metal Resources. So thank you all for coming back. I notice if anyone's muted, yes, you are in control of your mics, so that's good. You don't want to avoid that robotic me in my ear again. That was very strange. But what I'd like to do is have a bit of a discussion on energy metals, and such as lithium and uranium, and how that might shape the future transition for net zero. So I'm going to pose a question that we can then talk about, and it's really about how can you forecast the demand curve for both these commodities, especially with regards to the global push towards electrification and clean energy. And what signs or leading indicators do you keep an eye on? Aldo, can I go to you first on this, please? What are your thoughts?
Yes, on the London stock metal
tried before. So you have to pay fast markets to
sorry.
get a sense
Aldo,
of
it's
the
you
price.
that sorry, it's you that sounds a bit robotic. I'm sorry
Sorry
sorry.
for
I need to
that.
try and hold it together. Yeah, it sounds like I'm talking to an android. What I would do, Sean, can I come to you, Sean? Well, Aldo maybe reconnects his audio there. What do you think on this, Sean?
Sure. Thanks, Mark. Yeah. Well, I mean, I think look, we were talking earlier, weren't we, on uranium, and we were talking about some of the the drivers of the price. And I think look, in all commodities, it comes down to supply and demand clearly. But I think you've got some quite unique factors in the uranium space in particular, because we talked about the effect of the Russia-Ukraine situation on the European energy markets. But I think, and those listeners, I think who were on earlier, probably don't want to hear all of that again. But I think one of the things that I would say is you've got short, medium-term factors, which we talked about, and the input of the financial buyers in the market, which we haven't seen before. So that's a big predictor of the supply curve, but of the demand curve rather. But I think there's also worth looking at the longer term drivers, and one of the stats which we quite like using in uranium is 59 reactors are currently under construction across the world. A lot of those obviously are in emerging markets, and each of those will need 3 years worth of fuel just for their core loading needs. And given that we are at the moment predicting 18 months worth of inventory for the current global fleet, by the end of this year, that's just telling you that you've got to bring on a lot more supply. So, we've also talked about our own business case and the fact that we think we're in the right area. But I think, in overall terms, it's difficult to think of a commodity at the moment that has got better supply demand fundamentals than uranium. So I think that maybe perhaps goes some way to answering the question. But I think there are, what I would say is just there are an awful lot of inputs and things that we have to take into account. And just one thing I think to add, is the way that the energy mix is changing politically. If you look at global energy demand, uranium is around about 10%. Sorry, I beg your pardon. Nuclear is around about 10% generation, but that's 70% in France, nearly I think 20% across the OECD. So it's very much a developed market thing. So as you see more of this demand coming from emerging markets, you're going to see that overall percentage go up. So again, a long-term predictor.
That's very interesting, Sean. Thank you. I see you've done your homework on these discussion points. I'm pleased that we can maybe have more in depth on that. But I like some of the things you were saying there, Jack. Because of course this is uranium, and the other two companies there are regarding lithium. What do you look at to see the demand curve from a geologist point of view?
It's what's coming out of the ground, and quite frankly, there isn't enough coming out to meet these needs. So, firstly, we have to either mine more, and it takes a long time to get a uranium mine permitted and built and on stream. And beyond that, we were also using more as we transition across to green energy. I mean, what is the point having an electric car if you're burning coal to make the electricity to power it? So it's that kind of holistic view that drives me to feel that uranium is going to be the next fuel that will power our world.
Okay, fantastic.
Are you guys hearing me okay?
Yes, you're good. You don't sound like an android anymore. Fantastic.
Let me just add a slide, I guess. It's easier for me.
Oh, yes. You've got a slide. If you can,
yeah.
Can you load that up? Maybe while you're loading that up, Jason, can I come to you? Because I can see that popping up in a moment. What are your thoughts on this, Jason? From a lithium point of view, what are you looking at?
Oh, look, the key driver for lithium, as we all know, that electric vehicles. The numbers which keep coming out from them, it's crazy. It just demonstrates the insatiable demand for the product there. One thing, I guess, being here in Africa is, which I do pay probably more attention to, is actually the political aspects of the supply side. And you're certainly seeing various jurisdictions, various countries now starting to basically limit and restrict the export of that unprocessed product. And they're demanding more downstream processing in host countries. And obviously that's happened here in various countries here in Africa. But that's a growing trend there. You know, I read I think there was a company in the UK today, Mark, which has put out some study work about building two new lithium refineries. I'm not sure the company it is. And I'm saying, well, where the hell are they going to get their product from? And how, you know, they've put out there some fantastic NPVs, and I love the numbers.
Yeah.
But then I'm thinking, guys, where are you going to get the product? Because if that product now is going to be limited in its ability to be exported from some of the countries which have traditionally been that kind of those countries where you could export an unrefined product, because those host countries weren't as aware of the strategic benefits of those minerals. So I think that's one of the things I'm looking more and more at, is what are those limiting factors now which require you to actually invest more heavily in countries that you operate in getting a more value-added product, so that the host country isn't just benefiting from the revenues and the royalty streams from that low-value product, but they're actually getting some greater value and more sustainable businesses developed in the country.
Indeed, I've heard about this before, but certainly Zimbabwe is a country, isn't it, that was banning the export because they wanted to see it go up the value curve so that the money doesn't all go out of the country. So that's a very interesting point to consider. Aldo, did you manage to figure out how to upload a slide?
No, I can't. I just can read it. But the lithium demand is forecast to rise as uranium is from 350,000 tons right now to 2.5 million in 2030. There's studies supported by Canaccord and Fast Markets that over 7 million tons in 2040. The price has been going up and down. Again, it's not traded on the London Stock Exchange. Metals, it's a lot less than copper, gold, and silver. And the trend will be, we see it as countries produce subsidies or incentives or regulations to decarbonize especially the vehicles market. And Europe is key. There's a demand for 20x in this decade, and also there's a more strict CO2 footprint. So that all is driving rare earth minerals, uranium, lithium.
Indeed. Well, I think, Jason, what you said there is very important. I don't know where companies are going to get their supply from. It's very obvious, isn't it, that there's going to be an issue. We take the example of a very well-known stock, Premier African Minerals, on the AIM market there, having some of their not issues, but teething problems with the plant and a bit of jostling from the offtake partner there. But ultimately, Ford, who are the offtake partner's client, they need the lithium. So, you know, there's not much you can do about it, is there? If there's some lithium waiting, ready to go, then you don't really have a choice except to go for it. I wonder if I can talk to a few other things here that are quite poignant. Just talking about the sustainability and also the positioning of these projects, mining projects generally, but I think specifically with regards to uranium and lithium, or the green metals, because there are a lot of anti-mining, anti-fossil fuel movements these days. We see it all the time on the news. How do you think companies like yourselves, or maybe it comes from a government level, can reconcile the environmental implications of mining, which, you know, they're a lot better than they were, but of course they do cause destruction, with, of course, the positives, which is the green credentials, which is, of course, what we need to get away from fossil fuels. What does it come down to, do you think? Jason, let me ask you first that one.
Look, you've got to demonstrate first and foremost you're operating in the responsible way. You're not just in your mining practice, the whole chain of events, from how you get involved, how you partner, not just with your local stakeholders, all the way through. You've seen it in terms of all the end users, where the material is coming from, the critical aspects of that. Where is it sourced? How is it mined? You've heard Aldo, you've heard everybody here talk. You know, there's no point producing these green metals if you're burning coal, if you've got diesel gensets on site and so on, you've got to go into this from the outset with that premise that you're going to be doing things in the right way. And from when you're working in Africa, you're typically working in jurisdictions, or I should say, when you're working in developing countries, you're working in environments and jurisdictions where your host governments, your local counties, et cetera, they want to see that investment. They want to see that investment. They want jobs. Our Canusi copper mine, there's no other full-time employer in that region. We are going to be the primary. We're going to be giving full-time jobs to people that have never had full-time jobs, whose fathers have probably never had full-time jobs. We're going to have such a material impact on those communities. But you don't want to do it in a way which has happened in the past, where mining companies have, what is it? The curse, the resource curse. You've seen it throughout many countries, not just here in Africa. The Nigerian oil curse, you've seen it in Congo with the copper and the cobalt. You've got to do it in the right way. So if you're going to build a sustainable operation, which is supplying critical metal into those global markets, you've got to tick every box every step of the way, because today's investors are getting down into such the detail. Look at the ESG funding now, which is available. Yeah. It's probably easier for me to secure ESG funding than it is to go to the market and raise straight equity at the moment, if I'm able to tick all those boxes. There is so much funding available for those products, for those companies that are able to demonstrate their ESG credentials are at the highest level. And that's something I think all of us have to kind of aspire to do if we're going to build a business which is here for the long term. And that's really what we're here to do. We're not here to just build a business for 6 months. It's a long-term focus.
Well, indeed, given the supply shortages as well and what's coming, that these projects will be here for quite a while. I like what you say about all the way through, almost like a thread all the way through everything, not just, of course, the immediate environmental impact, but everything. Someone asked before about wages. You've got to look after the people in country. Do you think as well that the idea of the circular economy, which I think is something that's going to be talked about a lot more and more, is going to be something that you'll have to get involved with as well, or play that narrative a little bit?
You have to, particularly when you're producing a commodity now, which attracts such discussion in these countries. I mean, you look at the lithium up there in West Africa and the attention that is gained. You look at the rare earths in Angola. You're getting sovereign wealth funds from African countries investing in mining projects. That never happened before. They don't do that in the gold. They don't do that in your bauxite or some of your coal mining operations. No, but you're seeing them do that in lithium up there in West Africa, in the rare earths in Angola. You're going to see it increasingly more. So that role of us as junior mining companies trying to establish ourselves in that mid-tier bracket, we have to get, and we'll be drawn more into those discussions. There's no doubt about it, because the commodities that we're going to be producing are so critical to government policy.
Yeah, indeed. Well, we'll come on to talk about government policy in a moment. Alden, let me bring you in here. What do you think?
Yeah, I wanted to add, I mean, everything, I agree completely. And you got to tick all the boxes and everything. But I think that one of the answers to that is early engagement with the government, with the local jurisdiction, with the indigenous communities, with the technology providers. Normally you have companies like startups, they start raising money, private money, and then go get listed. And you just have to go stage of the EIA, environmental improvement, to just start talking about the project. You will not get approved, you will not get the funding, nothing will happen. It was an excellent introduction by our friend in South Africa, but I only can add, I think, that part.
Okay, thank you. Sean?
Yeah, Mark, thank you. I mean, look, again, I think, Jason nailed it there. And I think also in his previous comments as well, during his earlier presentation about being a good employer, about a place where people want to work, but also not just the point on wages, but the safety. that it's got to be a safe place to work. You arrive safely and you get home safely, and that's incredibly important. But just picking up those points and looking at it, I think maybe from an IR point of view, because I think we've covered the point about operations. And again, I think Jason touched on this, that the idea that the kind of investment that people want, you've got to think, who's investing and how has that changed over time. And you've got now a much younger cohort, who perhaps take the environmental issues perhaps more seriously than previous generations, that are very concerned about what they're investing in. And I for one wouldn't want to try and raise a lot of money for a thermal coal project, for example, in London at the moment. But the narrative is incredibly important, and we're all aware of the sort of the global politics of transition and so on are, and we need to position our investment cases according to that narrative. And what I mean by that is these things like ESG and CSR used to be kind of buzzwords. You used to just put smiling children on the front of the annual report and that would kind of do it. Now these things are no longer nice to have. They are an absolutely crucial part of the company strategy. And we're at Power Metal, we're investing very heavily in corporate social responsibility across all of our projects. So when we think about, I think Ado talked there about indigenous communities. It's extremely important that we approach that early and in the right way, and in a very sensitive, but also in the commercial way that works for the environment we're operating in. And it's what everyone, I think, we call the social license to operate. You've got to have that. You've got to have that key input, and it all builds the operations of the business, but it also builds the investment case, and it keeps us all very honest. Jason said in previous generations things were done differently, and I certainly think from an IR point of view, these were kind of brushed over, but now it's absolutely front and center of the story, and rightly so. So it's something we're investing very heavily in, and it's something that is a value driver for shareholders.
Indeed, it's very important, but also I think for attracting investors into the space as well, you've got to attract the younger people. I mean, Jack, you're the youngest on our panel today for sure. You are a geologist as well, and I was talking to someone the other day about the Camborne School of Mines and the fact that they've stopped a fair few of their geological courses. And yes, it's because of lack of demand for the course, because of the sector cyclical, but also this person raised a very interesting point, saying that actually younger people don't actually necessarily want to do the geo courses because they feel it's sort of stigmatized that, you're an old boy going around looking for rocks and polluting the atmosphere. What do you think? What are your thoughts?
It's an older view, definitely. I mean, part of it is an employment factor in the UK. There's not that many geological jobs that are sort of mineral based, and particularly with the fall of the oil fields, a lot of people aren't working in geotechnical roles, which may not be what they initially wanted to work on. But generally, in terms of the mining industry, it is very disappointing that Camborne School of Mines made the decision. I mean, looking within power, I know Tristan Potas, the CEO of FDR, recently completed his master's there, and it's a great school to learn from. It's a great, it's fed into the exploration, and it is a worry going forward of how we're going to actually have the staff to complete this. Just the other day, I saw that we're running out of mining engineers. We may run out of geologists. Who knows? And it is worrying, particularly as the world needs to find more copper, more uranium, more lithium. And where are we going to find the people to do that? It's an interesting degree, and it would be nice for more people to join the cohort and enjoy their careers like I have.
Indeed. Well, I think it comes down to telling the story, doesn't it? And it probably comes down to governments as well coming out and talking positively. And just finishing off our discussion here, talking about governments and how they're getting involved in these mining projects, actually directly investing in providing funding for these projects. How can organizations such as yourselves utilize these grants or opportunities available to you to advance your projects? And I know Power Metal Resources, certainly on one of the spin-outs there, it's now a separate company, Golden Metal Resources, how their operations there over in the United States are actively really quite hard pursuing this government funding. Is that something that, Sean, you plan to do well, were appropriate across the rest of the portfolio.
Absolutely. I mean, it's it's as people who follow us will know, it's a very important part of the gold metal story, and we hope to have some news on that soon. But yeah, I mean, look, the same applies to First Development Resources in what they're doing in Western Australia as well. And across the piece, I think it's it's very important, and it not just obviously validates the project. If a government body is prepared to invest, but obviously it gives investors what is effectively a co-investment right. So if you're seeing government grants going in, it gives confidence that investors can invest alongside. We all, as juniors, we all have to give and raise money from time to time, and you have to do that on the basis of an investment case on which you obviously then have to deliver. And the easier you can make that, the better. And obviously, if governments are prepared to back a project, I mean, places I've worked before, have like Pensana, for example, people might know, it's had a lot of support from the government of Angola. Those are good examples of where it's absolutely crucial to give investors confidence that the projects will actually be seen through.
Indeed. Jack, do you have any thoughts on this? I mean, I guess as part of your studies, you'd have had to have made presentations. It may be that you're presenting in the White House one day.
Actually, no. Never elevated that high. But it is important for governments to recognise the role that these missiles and this exploration will bring to their provinces. So Saskatchewan, for example, where our portfolio is highly supportive of exploration programs, and there are various we can get some benefits in terms of doing certain work programs there, as well as Sean mentioned. There are certain programs that we can use to access funding that we're looking at for FDR and various other bits. It's an important aspect, but it's not something I'm hugely familiar with.
Okay.
Sorry.
No, that's fair enough. That's fair enough. I wanted to include you in the discussion, of course.
Thank you. It's very kind.
That's okay. Yes. Aldo, what do you think on this? And maybe with regards more to where your jurisdiction is in Chile, are you seeing interest from government level?
Yes, just the fact that the national lithium strategy was announced. There's the new mining ministry who has thought of speeding up the processing for all investors, all kinds of minerals. There's also a roadshow taken by the government to Europe and Canada and the US. Currently, there is a Chile Day today in London as we speak to promote investors. And then also, even though the projects are in Chile, we're a European company. So we've been talking to authorities in Europe. We haven't been in the White House, but we talked to the State Department of the US, who's very interested in lithium. It's a strategic geopolitical race. We don't have to mention the countries and the regions. And as rightly been said, there's a race to secure demand for the mega factories. So yeah, both at a local level and international level, we've seen interest. And also that when if the state comes in as a minority shareholder or in our projects, of course they can bring infrastructure, they can bring energy, they can bring a lot of things. There's a lot of value to that. So yeah.
Maybe almost like the new space race, hey? Who can secure the biggest supply of new metals? Maybe. Jason, let me come to you. What are you feeling from the African side of things from government level?
Oh, look, I think we've just had in Nairobi, we've just had the big Africa Climate Convention here, which was a tremendous success. And you had this Nairobi Declaration, which called for a greater role there for the youth in terms of climate change. All the commodities we talk about here and we're involved in here are massive contributors to that. So for us, I see your ability to secure grants and so on in Africa limited unless you're aligned back in your main primary listed country, Australia, etc. What you've got to be able to do here is clearly demonstrate an ability in how you operate to secure those. There is the opportunity, but fundamentally for me, I think the strength of your project has to support your ability to raise funding, irrespective of funding and grants. Your funding and grants are, that's the bonus. That's the bonus you get from how you operate and the commodity sector you're focused on. And clearly all of us are focused in an area now where you've got host governments, jumping over each other to secure these long-term sustainable supplies. And the reality is those supplies aren't coming from the developed world. You're not going to be able to go and get these supplies out of Western Europe, out of the UK. It's all well and good, like I mentioned earlier, companies building refineries, be there rare earth refineries up in the northwest of England, or lithium refineries up there. These products have got to come from somewhere in the developing countries, be that in South America, be that in Africa, other parts of Southeast Asia, etc. So to do that, yes, it's great to get this support from these host governments and from the governments in which you're listed in, but you've got to get that balance right, because increasingly what you're going to see is the demand for your product to be mined, processed, and into an almost final state in these jurisdictions. And, being able to secure these grants almost goes against the momentum shift to where these countries are going, in my mind. So probably a little bit contrarian to some of the other points there. I'm sorry.
No, that's good. That's what we want. We want to talk. I want an open discussion, but that does bring us to our closing time now. Thank you all very much for joining us. I've certainly enjoyed the discussion tonight. So thank you to Sean and Jack from Power Metal Resources, Aldo from CleanTech Lithium, and Jason from Marula Mining. And of course, thank you very much for everyone at home watching. I hope you've enjoyed it, and I hope you can join us next time. But for now, thank you all for watching, and from everyone on StockBox, good night.
Thanks, Mark. Thanks, guys.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.